Some hilarious stuff. Okay. What up, guys? Get started here just shortly. Let everyone roll in. Today was actually a pretty interesting day, though. I actually thought it was gonna be a little bit more dull in terms of price action. It wasn't that bad. I think we had some decent moves. I think some decent price action in terms of the callouts over live. Once we ended up seeing what the surrounding factors was, what the background was of the market this morning, I think everything else just pretty much fell into place. What's going on, Transitory? What's going on, Wiley? Welcome in, guys. We do have FOMC minutes tomorrow, as I pretty much documented in the headline there. So we do have the minutes going to be coming out tomorrow at 2 p.m. Eastern. That's going to be pretty much the highlight of our day tomorrow. It's going to be quite interesting. Today's price action actually felt a little bit more of a relief because I did expect that we would see more of a steepen decline in the market here today. But the fact that we had such a, I want to say drastic recovery, because I mean that was pretty astonishing recovery that we had today overall, and the fact that even names like say Tesla was just down so much, Amazon was still down so much, it was just a nice little push that we had from the bottom of today, basically, from our lows of today. So strong movement that kind of tells me that we're gonna have a little bit of a continuation to the upside here tomorrow. I do think our upside is a little bit limited, and the market's likely gonna end up putting us, whether it be a gap up or a gap down tomorrow. It's likely going to be the fact that the market's going to wait for the Fed minutes to really see if the market, how the market's going to react, and then we'll be able to determine if the market needs to basically price in more. Maybe we get more kind of, I want to say, influence in the sense that we heard Powell not that long ago say that it's going to be longer rate hikes, higher rate hikes. We want to see if we're going to get that kind of feedback off of the Fed minutes, and that's what's going to be um, pretty important. Let me read what you wrote. I was using my phone when you were pretty quiet. Through Bluetooth on my car, I still had to turn it up. You're on computer now and still softer. I had to disconnect from Discord because Dapper was much louder than you. Not sure if it's a YouTube thing or on your end, still audible, just soft. Um, Honestly, Bear, I actually tried to check this and Googled everything because I had some say that they actually heard me on computer. Some actually told me that they weren't able to hear me on the mobile. That was pretty much the most odd thing right now. So I'm kind of a little bit more a little flustered on that. I've been trying to be in communication with Tom to see if there's maybe a resolution that he knows on his end. I haven't at least gotten an answer just yet, but it's just kind of odd that some can hear me on one device and then some can't hear me on the other. So I'll try to do something, maybe speak a little bit louder for you, for Bear. But I don't have a short-term resolution on that just yet. I have all my volumes basically turned up right now. My mic is pretty darn close to me. If I'm gonna scream into the mic, it's probably gonna be the only resolution I have for right now, though. All right, so hang in tight. I'll see if there's something that comes across that I'm able to pretty much find for a solution on that. All right, all right. Hopefully that ended up helping you there. So maybe if I speak a little bit more loud and scream into the mic, maybe we have a better issue there to be resolved. All right. Transitory. You said that Tesla puts for June 17th. My thoughts on the downtrend. I actually do have Tesla coming down quite a bit. I know that if I'm not mistaken, Avery also had it in the mid to low 500s. I agree with that. If you actually zoom out transitory, and this is pretty much just something verbally that I can just mention, I don't necessarily have to show you on chart. But if you actually look at Tesla on the weekly, and you actually pull up basically your EMAs, you have the 200 EMA that's basically sitting at the low 500 mark. I believe to be exact, it's 502 that Tesla will actually reach into the 200-day SMA on the weekly chart. So that's what I overall have it pretty much projected towards. But then here where it comes to the day-to-day, the week-to-week aspect of reaching down towards that target, because obviously we're looking at about 128 points down on Tesla from current price. So that's why I've been in the mindset, I've said it for maybe weeks upon months now, be in the mindset of the fact that you're going to end up buying out for that expiration that you're saying June 17th, in the sense that even if you do get bounces, like maybe we get a bounce tomorrow, you're going to have to be holding through that. and just have that long term aspect for the mid to end of June in terms of that price target of the 500 mark. But if you're trying to pretty much play it day to day, week to week, then you're looking to pretty much short the bounce. For instance, we got the bounce pretty much. If we get a bounce tomorrow, you want to look to pretty much end up shorting that. We had the nice bounce that we had yesterday. If you would have shorted that yesterday, look what it's ended up doing today. So it's always been the mindset. I've repeated it over and over. Is that instead of buying the dip, like potentially you had, and you did have an opportunity to buy the dip today. I will say that, but more so than not, I think you win in this type of market environment, shorting the dip, shorting the rip, rather than buying the dip. All right. So hopefully that kind of made sense for you. But I do like that expiration that you mentioned. And that 502 mark would be my overall PT for you, transitory. All right. And that's what I'll be looking for. Any thoughts on the CVS entering into big resistance zone? Jacob, I'll pull up the chart on CVS. I do have it charted up. The reason I had it charted up was because I know that we had the cloud alert that went off today. So I'm going to end up looking at that for you. I wasn't too big on the cloud alert that came out, and I'll kind of show you that exactly why. The one I do like here overnight, and I know that I heard Tom say that he has a small position overnight, was oil, specifically the CVX cloud alert that went out. I do like that one in particular. I think we could see a nice move out of that to at least hit the target. So that is the one that I actually do favor today that went out. But that CVS one was a little bit iffy to me. All right. So I'll take a look at those. Just one thing I pretty much wanted to stand out. Obviously, I said tomorrow's gonna be a wild card day. FOMC minutes coming out at 2 p.m. It kind of feels like maybe we get a small gap up, maybe a small gap down, and the market kind of send us a little bit sideways, trending in that favorable direction into the FOMC minutes. But one thing that I pretty much just wanted to stand out was basically your downtrend resistance, and then obviously we can see there's a glaring inverted head and shoulders action that took place from today. So we want to see if we get a follow through, or I want to say actually a breakout because we haven't necessarily broken the neckline on this inverted head and shoulders. We want to see the breakout of the inverted head and shoulders here, and then see the nice follow through, which we would end up particularly seeing us towards. The neckline would basically put us right around that 397 to 397 half. And then if you're gonna look to break this larger degree downtrend resistance here on this hourly chart of SPY, you're looking to get over 399 half, and that's where we're gonna see if we get a bigger follow through in terms of this potential gap fill that we have sitting here between 407 down towards 404, and that's gonna be a large gap fill to be filled. So that'll be something we'll likely have to see on the back end of FOMC minutes if that's going to be able to push us north of that 399 half mark and then being able to test the gap fill. But all eyes to me point to the sense that we probably get a nice little gap up tomorrow, but my struggle is that I don't see the continuation that's going to be able to be fitted for us to break this downtrend resistance. That's where it's more of an issue for me, and then that's where we're going to have to see how FOMC minutes actually sits with the market. All right. So that's pretty much just a glance I want to say at SPY or what I'm sitting at. 399 half would be the big spot that I want to see. If you want to break over the neckline of this inverted head and shoulders, 397 half is what you're looking at. Otherwise, if we particularly look to break down right back below this 390 mark, that's when it's going to get ugly. And that's likely going to be on the back end of FOMC. It would be my estimation. All right. Let me take a quick look at some of the names that you want to see. CVS was the big one. And here's pretty much my chart that I was looking at with CVS as I try to expand it as much as possible. You basically see a well-defined downtrend resistance. You have a little bit of a trend line, downward trend line support here, but the pattern that you're looking at is a descending broadening wedge. And I've said it multiple times that this is actually one of my favorite charts that I love now. And it typically ends up giving you the best range once you're able to distinguish the support level and you get a meaningful reversal. You're able to see how much distance there is back towards the resistance. And when I actually looked at it a little bit earlier, it kind of looked like it was bull flagging a little bit on the two on I want to say on the 2 hour chart, it was looking like it was bull flagging. But as you see, you got the beautiful continuation north. You're going to look to see this pretty much break over this 97 mark. And I do have this going into a downtrend resistance at 98 low. Specifically, right around 98.15 will be where I have CVS hitting into downtrend resistance. And then just a bit above that, you have the gap fill that's sitting at 98 half. So I don't expect to necessarily fill that gap. I think by the moment that we end up hitting this downtrend resistance, it's likely going to end up being our pullback. And then maybe, depending on the broader market, maybe we end up getting the retest or we end up pulling back all the way. All right. So that's pretty much my scenario that I'm pretty much looking at. It could be another scenario in which, as you see, you have a nice little inverted left shoulder here. You have that steep head, and maybe we end up hitting that downtrend resistance at 98.15 there, and then we have a right shoulder form, which would be maybe I want to say a few days. If you notice, the left shoulder is from the 6th of May, and up until the 17th. So it could be a few days in which we see a nice little rounding bottom action here to form a right shoulder before we make a nice clean breakout. But otherwise, cloud alert wise, I this is why I didn't see it fitting, is because it's likely gonna end up hitting the downtrend resistance, and then I didn't see this pretty much breaking down. Is what I wanted to say. All right, but 98.15 would be that big spot, and then you'll particularly see if we can stretch up towards that gap fill. All right, and that's pretty much for CBS. Target, I haven't looked at Target in quite a while. I know this thing's pretty much just been dead. I'm gonna delete whatever I have just to see what it looks like fresh. Probably have to go out to the weekly here. Damn, that's a disgusting looking chart. My goodness. Ew. All right. Let's see first. Where's our major support level? I think that's the first thing to pretty much establish here. Will be where our major support level is. And if I'm looking at our major support level, it looks like we've tapped it so far. This would have been my first major support level. I see that we're pretty much holding above it as of right now, between the zone of 146 to 148. That would have been the level that I would be looking for to see target hold. And you're saying has a hammer today. I'm assuming that's off of the daily. You could say that. I could see why you say that. I need to see the follow through on it. Obviously you want to take out the high of the day here over 152.09. So I see why you say that. You do have that nice little gap fill here that's sitting just to be completed around 153 half. But if I'm really looking for the bigger level, that really stands out to me for, I want to say, a more meaningful reversal than just that hammer, I think that 155.28 ish would be that mark where you want to see this break over. So that's about a $5 move to the upside that you're looking for. But that would be more so my convincing level in which I would say that I think we found a short term bottom. Otherwise, what I think you're particularly looking off with this hammer is maybe just a dead cat. That's my only concern I want to say with that. Right now with Target, because you might end up just getting this gap fill off of that hammer, and then it's gonna go back south. That's my only concern about that. I would have felt a lot better if it was off of the weekly, not the daily. And then obviously the broader market perspective also is something that you have to pay attention to as well. In which case, considering that fact that I'm expecting a little bit of more of a follow through, a little bit of a bounce here off of today's price action, that kind of follows up with this gap fill, and then that's going to be where the question mark is. Are you going to get continuation above that gap fill, or is it going to come right back down? All right. So that's what I would say right now in terms of that. Obviously, you pretty much want to hold that low that you put in off of this hammer, that 145 half. But otherwise, that gap fill above the gap fill would be my major concern for you, which would turn this into pretty much a dead cat. All right. Other than that, I can circulate through some of the names that I pretty much had on watch. I threw out quite a bit of charts here today. Hopefully, you guys pretty much paid into attention into the ideas channel. I had the ascending broadening wedge action that played on Tesla. You had that beautiful breakdown this morning and that I was watching. Then you had the nice reversal. I was watching for it to pretty much break under 635 to pretty much get the continuation. Once we had this little rising wedge action that played out for the retest of the broadening wedge, I was looking for this to flush under 635. You had the beautiful breakdown under 635, and you got as low as 622 here. Actually, no, we tapped 620. So that was about a $15 downside. That hopefully you heard me saying that on live 635 once we had the retest. That was information. I was looking to break back under 635, and that was a $15 drop that we had. So that was a beautiful one. I love on NVIDIA. I'll get to NVIDIA in just a quick second. But hopefully you guys actually caught that one. 622 was a level I was watching to hold. We ended up getting down to 620. As you heard transitory mentioning, I know I have a longer term target to the downside of that 502 mark. We'll see how long it's going to take for us to get there. If we end up getting a bounce tomorrow, look to likely end up being a potential short. But today's weakness with the broader market pretty much pushing from the lows was not a very healthy sign for Tesla to get any kind of meaningful move to the upside for me right now. So I'm gonna have to see how it pretty much reacts pre-market. If the market, if it pretty much gets a nice gap with the broader market, then I probably see how that ends up formulating once the market opens. All right. You mentioned the video, so I'll get right to it for you, Alobo. The video was just a beautiful one. I had a nice little descending broadening wedge. The only thing that scares me, I want to say that about this descending broadening wedge, because typically this is a bullish pattern, is that um, it's likely that I don't want to say it's likely, but it has that feeling though. Even though everyone's expecting the video to come down even further, that it's going to give us some kind of pop out of this pretty much this bullish pattern that it would be off of the back end of their earnings. That's just something that crosses my mind. But going into tomorrow, I had well actually speaking of today's action, I had this pretty much breaking down. I said to pretty much watch it here down towards this 163 low. That was a beautiful breakdown. I had the zone highlighted also on the ideas channel when I dropped the chart there. It went right into my zone at this 160 to 159 mark. And then it also gave us another opportunity. You had a beautiful little head and shoulders action I outlined. But what did it end up doing? It felt pretty much felt right above my zone that I had. And we had that beautiful reversal with the broader market off of the lows. And that was a beautiful one. So what am I looking for tomorrow? I'm looking for earnings run up. Earnings run up with the broader market gap up likely would be my scenario in which I'm projecting this to play out. And in which case, I'm looking for this to pretty much go right into the downtrend resistance. Downtrend resistance is right around this 165 high. And at that point, you're literally just looking at this gap fill to be in play. 166 to 167 for this to be completed. And that's what I'm particularly looking at. I had I had second thoughts about pretty much swinging the video calls to get our earnings run up. That was pretty much going to be one of my plays here this afternoon. I just decided to pretty much stay cash. I like my sleep, so I'd rather just stay healthy. The day trade opportunities I've had for the past few days have been more than wonderful. So I'll wait for tomorrow. Depending upon the gap up, I'll see how I go about playing it. But my upside, I'm pretty much watching is about 167 here. If we really do stretch, then 169 would be my upside target, in which that would be about literally retracing all of today's price action and about an $8 move here going into tomorrow. All right. AMD was the other one. Kind of looks a little bit similar if you want to say that. You had the breakdown off of this. I want to say it's a little rising wedge action, bear flag, depending what time frame you're looking at. And then you had the head and shoulders that was pretty much a mirror image of Nvidia's head and shoulders. And then you had the nice reversal with the broader market. Upside for this one, if we do get pretty much semis running up in conjunction with Nvidia, I'm watching upside here towards that 93 low. And above that 93 low, you're watching the gap fill here that completes at 94. All right. And that's what I would look at. Why are they expecting further decline in Nvidia when AMD kicked butt on their ER? Honestly, El Lobo, it's not the fact that I think no, Semi's earnings have been pretty much, to me, in my opinion, they've been pretty solid across the board. It's just the market environment that we're in. If it was a bullish market, I think no, a lot of the tech earnings that we saw got slaughtered. It wouldn't have been the same. It's just a market in which we're pretty much sitting in the bear market, the correction territory. A lot of names are still pretty much what you would say is overpriced, overvalued. Their forward PEs are still high in this kind of relative market that we're sitting in. So it could be whether maybe there's some kind of slip up in which they're saying something about demand. That may be something that they're literally looking for. I expect Nvidia to literally beat on their earnings, but I'm sure it's either going to be some kind of profit taking as an excuse for the market conditions, saying that it's overvalued still. But that's kind of going to be left to be seen upon how if there's really an earnings run up or not. If there's not an earnings run up tomorrow on Nvidia, I think that's why I say it is a bullish pattern setup. It is a descending broadening wedge. That to me is has been one of the most bullish setups that I've seen. Other than I pretty much failed on inverted head and shoulders. I think those all fail in this type of market. But descending broadening wedge has been one of my favorite patterns for the bullish setup. So that's why I'm kind of saying that I'm second guessing the fact that it's gonna end up dropping like everyone's saying, and I think you do see a pop. It's just that I don't know if it's gonna hold with this market environment. That's the bigger perspective that I wanted to mention, right? In this market environment, everything feels like it's overpriced. Everything's getting slaughtered. Everything's wiping out all of its gains that we had for basically the past 2 years, and that's what you may end up seeing, whether it be something on guidance or something about profit taking being as an excuse for the broader market, saying it's pretty much overpriced. That's basically your two scenarios that you're watching. All right. But I think the bigger story will be whether we have an earnings run up or not. We'll likely say whether we get a quick pop, and then the questionable scenario if it holds or not with the broader market. All right. But that's pretty much NVIDIA. And here's the sleeper, and I think I heard Dapper talking about this one. I do think that Microsoft is likely going to be the sleeper here tomorrow. If the market does pump, we get continuation of that reversal from the lows today in the broader market. I think that Microsoft is the sleeper here right now. I do think that we're likely going to end up filling this gap with ease tomorrow because that would push us right in towards 265 high and right into what I would say is my downtrend resistance. You can see a little bit of a broadening wedge formation here right now. Excuse me. And that's what I'm basically looking for. You had a nice little inverted head and shoulders. You could say that left shoulder is a little weak, but nonetheless, a little inverted head and shoulders. You had the beautiful continuation with the market pushing into the close here. So I'm pretty much targeting this one. This will likely be the first name that I particularly watch. If the market does decide to gap up tomorrow, I'm going to look for this one. I want to see this push over this 262.60 mark. And once we break over 262.60, that gap fill to me just seems like a lock going into this one here tomorrow. So that's what I'm going to particularly likely pay attention to if the market is green here tomorrow morning. And that'll likely be the first one that I probably take a quick fire at. Microsoft Nimbus and unusual calls fired. Bear, I'm glad you actually told me that. I did not notice that. I'll be honest, I probably didn't even look at flow alerts this afternoon. I kind of slept on that. But that actually plays right in then. So I'm glad I'm actually reading right into the flow alerts because this setup just screams bullish to me right now. That's why I'm kind of leaning to the fact that we have a nice gap up and Microsoft is likely going to end up leading the way. Tesla, not so very much. Obviously, you saw Tesla staying relatively near the low of the day. Apple, I think it's going to have a meaningful bounce. I don't see anything in which Apple's going to lead the day here tomorrow. So if I really had to say where I think the what's going to lead the market here tomorrow, I would say it's likely going to end up being the semis, and it's going to be Microsoft if we have a green day tomorrow. All right, and that's pretty much what my projection would be if I just had to give you in pretty much a round ball scenario. All right, so that's Microsoft. What I was watching for. I don't know. Do I have Amazon? Yeah, I do have Amazon drawn up. You have, I want to say, a little bit of a wedge action here going on. I think my support level is pretty much invalidated here now. But you had this little, I want to say it was a little rising wedge type action. Obviously, you could see, but this is another pattern I don't trust in this kind of a market unless it's usually on SPY. I don't trust it individually on some tickers. It's been something in which case I've seen it work 50% of the time, 50% it doesn't because when the market's green, I've seen these rising wedges just break north with ease. So that's something that's a little bit more of a concern for me if I'm bearish on Amazon. But if you're really watching for it, you really want to see the break over 21.14 on this one, and then we'll look to pretty much test the downtrend resistance at 21.36, 21.37 mark, and that'll see whether we have further continuation to the upside or not. All right, but little bit concern here. I'm kind of feeling the sense that it's gonna break north of this rising wedge, but tomorrow morning will be the telling story. If we see a green market, I don't think there's a doubt that my Amazon's going to break north of this rising wedge. If we gap down for whatever reason tomorrow, then that'll be the possible case that it breaks down the rising wedge. All right. Um, John Boy, Nimbus ran 50%. Whoa, I'm happy about that. I heard Dapper mentioning Microsoft while I was working on something. I heard him mention it on voice, and I think he was also high about Microsoft going into tomorrow as well. So hopefully that ends up being literally the play tomorrow. I think that's gonna be more so the bigger play tomorrow and gonna lead the market. And I'm hoping that likely semis follow in suit behind Microsoft. So hopefully that ends up playing out. Bear, you have 267.50 June calls, I believe. I'll have to check after. Oh, that's what they actually hit on the Nimbus, I'm assuming. 267. Let me take a peek back at the chart. Hold up. Let me see. Microsoft. 267. So they're looking for a little bit more than just a gap fill. They're looking to basically reach the high that we had back from roughly May 17th. I don't mind that. I really don't mind it at all. I already felt like the gap fill was already a lock on Microsoft, so I don't mind that play at all with Microsoft going for the 267 if that ends up playing out. So I that'll likely be at the top of the watch list, to be honest with you. And then the semis will likely be right behind it in terms of building my watch list here tomorrow morning. So that pretty much is just a sum of what I'm watching. Everything else pretty much just looks like it's gonna be outside noise. I had the Netflix chart also put up here this morning in Ideas channel. This is another one that played out. You saw the beautiful gap down breakdown on this little wedge action. You had the beautiful little hold. It held above my gap so that I was pretty much watching to see if we would get that gap. But I can understand why it ended up reversing there. That was pretty much a very confluence level when we had the reversal back from May 18th as well. And then we formed this nice little wedge. The only thing with the wedge that we formed basically intraday here was that you broke down, but we entered right back into the wedge. So we'll see if we end up breaking north or south, and then either or gap fill will come into play here. Because you do have a gap fill above 184, and then you have the gap fill here below 176. So kind of just pretty much flip of a coin here, depending on overall market conditions tomorrow. Breaks north, then you look for the gap fill above. Breaks south, you look for the gap fill right below. Um, just because of it's literally sandwiched between two different gap fills. All right. See what else? What else? Sid, you're holding a Facebook put. I did I look at Facebook today? I don't know if I looked at Facebook today. Honestly, no, I did not look at Facebook today. That's actually one I did not look at. I have something highlighted. Why do I have it highlighted? Let's see. Probably stretch it out to the daily. All right, let's stretch it out to the weekly then. All right, so weekly actually tells me that yes, your Facebook put should end up paying out. Whether that ends up paying out tomorrow or that takes a little bit more time, that's the question mark. But I did have a nice little zone that we're sitting at. You have a larger degree ascending broadening wedge action. You should be coming down towards 167 low would be your potential target. So I would assume you're looking at somewhere in that ballpark of that 167 mark. And then I know that Avery even had it coming down lower. I think he had it coming down to about 140-ish, which would basically be retesting the COVID lows that you have. So I'm not against that, and being at the fact that it's an ascending broadening wedge, you typically end up breaking the support level. Um, I think it's left to be seen if we'll get a retest once you break that support level, but you should end up likely coming down to the COVID low, which would put you right around that 137 to 140 range around the March COVID lows. All right. So I like that play. I just hope you bought some time on that Facebook put spread, Sids, because I mean, obviously the fact that it's already down $14 here today, I would expect a little bit of a retracement here, especially if the market's green tomorrow. So hopefully you at least just bought yourself some time on that one. All right. Preferably, I would have liked to have waited for a green day to get into a Facebook put spread, but I understand why you see that. Just because of the fact that it is a larger degree bearish setup. All right. Um, I'll take a look at Snap in just a quick second. Transitory, if Microsoft goes up, should we be looking for QQQ to head higher too? Transitory, absolutely. If Microsoft's going to go higher, then QQQ is going to go higher as well. That kind of goes in the sentiment of which I expect a little bit of a gap up. Hopefully a little bit of a continuation from that reversal off of the lows here today. All right. Let me take a look at Snap. Damn, Snap is just disgusting. I gotta say, I remember trading Snap literally in like the $50 to $60 range, even up to its highs. But to where it's sitting at right now, this is just disgusting. And if you did, I actually have no, I didn't. I thought I had a zone sitting on this one, but I guess not. But if I really had to say where your level of support is that you're sitting at, that you're really looking for, ideally, oof, that's tough. Yeah, I think you're literally coming down right into the zone right here. This is your zone that you're likely coming down into. So if I try to expand this right now, and then just looking at the confluence of prior price action here right now, you're coming down towards about $10 to $11 is what I'm targeting here on Snap. I hate to say that, PW, but yeah, I mean, it's only about what, just under $3 away from hitting that target. I would say, and that's not even the March low. That's disgusting. Wow. The March low is pretty much sitting all the way down at $7. I think it's a little bit left to be seen if it's really going to get all the way down towards $7. But $10 would be that spot that I think you end up looking for it to hold. That would be, I mean, for me personally, I think that's the level that I want to see it end up holding. That was a level that you had it as a reversal back from May of 2018. You had a nice little launch pad there, which you broke out from May of 2019, and then obviously you had that beautiful reversal in the middle of those COVID lows. So $10 would be that spot that I'm looking at. It does look dead. It's not a name that you really want to just pick up right here, just blindly. I understand it's cheap. It looks like a good prospect for shares for the long term, but I do think you can get a little bit lower. Given the fact that I don't think anyone has said that the broader market has bottomed just yet, I think you have a little bit more time to pretty much find a more ideal bottom on Snap, in which you could pick this one up. So $10 would be where I say that if you're looking for a long term position, you look to pretty much start a position at $10. And for whatever reason, if it does go down all the way down towards the COVID lows, then you're likely looking to pretty much average up or average down at $8. All right, and that's how I was pretty much going about playing it. What else was there? K Buzz, I did go over Tesla already. I went through today's price action that was pretty much sitting. I literally called it out on live. I dropped the chart in ideas. I said that it had a nice little ascending broadening wedge action. We broke down. Once I saw the reversal starting to pretty much come through, I was calling for it to break down under 635. You got the break. 620 was that meltdown spot. If it ends up breaking down back below the 620, then I do have this coming down towards the zone here. That's pretty much it's about a $10 zone. Let me see because I didn't look at it too much in terms of I just highlighted the zone. But the level that I was pretty much watching was in the middle of the zone was that 591 spot. All right. So 591, if you break 620, 591 would be that next level. The one thing that was the most interesting part about Tesla is that I saw 600 puts rolling in since last week, and that may have even been before that. But they were rolling in towards the 600 puts for the end of the month here, just repeatedly. Could you end up getting a nice little decent sized bounce? It's more than possible. You could probably retrace back up towards that 635 level, which would be a big level that I was watching for the breakdown, and it may end up acting as a resistance for that 635. So 635 is your upside. You break north of 635, that's when I particularly say that you're gonna have a little bit more than just a dead cat above 635. Otherwise, you look for this to pretty much break down below that 620 level, and then you end up seeing 591 on your downside. All right. So that's what I would pretty much look to say. So PW, you wanted more downside. You made 70% on puts. Congratulations, PW. I'm happy about that. Today was definitely one of those days where you had an opportunity to pretty much play puts. But then on the flip side, I think once Dapper literally came on live, I think that was the point where we started to find a relative bottom intraday, and Dapper literally walks you through the entire reversal back to the upside, right back into the basically your value low, testing into your mean. I mean, he literally walks you through everything from A to Z on that reversal. So, you had an opportunity to make money both ways today. Hopefully, you guys ended up capitalizing on that. Tomorrow is going to be a little bit more of a tricky day. Of course, FOMC minutes. It's going to be at 2 p.m. Eastern. I've already said it before. I'll say it again. Usually the first reaction is sometimes the wrong reaction. Be cautious about that. Wait for the trend to form because more so than not, once the trend does form after FOMC minutes, you'll be able to pretty much capitalize on that. In which case you end up having a trend going into the close of the market. All right. So just stay patient with that. Otherwise, if you're looking to play early on in the morning, you're looking for day trades. I would try to stay clear. Close out your positions before that 2 p.m. Fed minutes so that way you're not caught pretty much holding, I want to say, a dead bag. All right. Or a bag with a hole, however you want to say it. All right. So that's pretty much the scenario when I'm watching. Um, I think we have to see ultimately if we get a gap up, which I would expect it to be. And then I'll be able to pretty much look for continuation on Microsoft, AMD, NVIDIA, my three biggest plays that I'm likely expecting here tomorrow for the upside. AMD and NVIDIA pretty much earnings run up, and then Microsoft likely leading the way on the upside. So those are the three that I'm likely watching at the top of my watch list. I'll drop it in ideas once I see that we likely hopefully get a gap up and we get some meaningful upside that presents itself. Otherwise, if we get the gap down, that likely does change a lot of scenarios here right now. All right. So other than that, though, I'll leave it short and sweet right there. We'll kind of wrap it up. What about Disney? Today's the third time it tested the 100 area. All right, Bear, I'll take a look at that last ticker for you before I wrap it up real quick. I have not looked at Disney in, yeah, it's been a while since I looked at this. Damn, how many red weeks does this thing have? My goodness. 6 red weeks on Disney. I do actually have my support sitting at 97 low. So 97 half to 97 low. I want to say 97.39 was that level that I was watching. In which case that gives you about a near $3 downside from current level. That would be where I would say that you particularly look for that reversal. Obviously, you can look at the chart about 6 red weeks. I want to say that it's going to be 7 red weeks when it's all said and done on this week. Well, no, I mean, this week's already red. I take that back. So it should end up likely finishing the 6 red weeks on a red note down towards that 97 mark, if I'm being completely honest. 97 low, and that's where you look to see if you get a rebound going into next week, which, of course, just for a heads up, if you're going to end up taking a blind position on Disney saying that 97 is where Drake told you it's going to reverse, we do have a long weekend. So maybe it might be worth waiting until next week, Tuesday, to really see, to pretty much get into a rebound play here on Disney. All right. But 97 low is where I will be looking for the rebound on Disney. All right. So I'll call it a wrap there, guys. Hopefully, I was able to help you guys out, give you guys some important levels. No, hopefully, you guys actually paid attention to the ideas channel. That was pretty big. I give a lot of those key levels, those big patterns. I think that's usually something that actually helps a lot with the psyche, especially when you guys are looking at Tesla and you're looking at Amazon, all these big names. You know, those bigger level, those bigger degree patterns is really what you want to see on a larger time frame. That really gives you that assurance of whether it's a bullish or a bearish trade. All right. So hopefully that was able to help. But other than that, appreciate you guys joining me here on live. I'll see you guys tomorrow morning. But other than that, appreciate it. Later, guys.